Now we're going to pivot a bit into India and Europe, and we're just going to start off with Europe, but then we're going to look closer at the India side of things. So we're just going to shake it up a little bit, just because there wasn't too much European data and there wasn't all that much to update. So we're just going to include India into this segment, after we go through some of the European data, with it being mostly driven towards Germany. So when we look at consumer prices, all items for Euro area and all items for the U.S., I think it's interesting to see just where the U.S. is in relation to others and how some have already started to moderate. But it's less, based on what we're seeing, we think that this is going to be more of the U.S. pulling everything higher when we look at some of the prices. But when you look at Europe, obviously it's still above the highs. It's still setting all-time highs when you look at the harmonized index of consumer prices. But the pressure is going to just continue to mount, even as wages continue to come under pressure, not just in the U.S., but also in Europe, which impacts just underlying buying capacity and abilities to really kind of grow and draw additional interest. And then when we look at Eurozone construction output, it's up, but it's still missing some of that growth that we've been expecting. And that's why when we look at Europe, we've been saying that we expect Europe to recover, to see growth, but miss estimates, because everybody, and at least all of the estimates that we've seen, have Europe growing at these exponential rates. And it's like, that's not going to be the case when you look at wages struggling and now Delta variant growing again. And just, you're going to start to get into this cap perspective, which is just going to slow some of the abilities for them to see some additional growth. Now, while all of that being said, German PPI has quickly closed ground and is now above that trend level that was set in 2017. And again, just based on everything that we've talked about, it's unlikely that we're going to see this adjust lower. Instead, we think it's going to continue to trend up, and not really surprise sporadic aggressively to the upside, but really just continue along this current trajectory. And then when we look at trucking miles, they're starting to roll over again. And this is where we continue to see some of these pressure points coming into the market. And looking at Germany, because as we've been saying, we expect the German economy to miss some of these estimates and see some additional slowdowns as we go into the end of Q3. Now, when we think about all of those problems, let's shift now to Asian inflation, because where is Asian inflation? So U.S., and it's interesting because the developed market is actually starting to go above expectations, where India is now well over target, Russia, South Africa, Poland, Brazil, Mexico, Colombia. So when you look at relatively contained, it's in a relative term. Because India is not contained, Malaysia is not contained. Now, other ASEAN or some other South Asian nations are contained and have some capacity to keep some of this easing. But Malaysia's already in a rate hiking cycle, and we're starting to see rate hikes come through because they're trying to get ahead of some of this inflation that they see coming down. So the developed world is getting a bit worse. Emerging markets are getting worse, and the Southeast Asian nations are looking at this thing. We know how this game has been played. We were here in the 98 Asian currency crisis. We're not doing this again. And that's where you're seeing a bit more of a preemptive slowdown, which is going to hinder some of that economic growth. Now, India wholesale price increases year over year. The survey was for 12.2%. The actual came in at 12.1%. The problem is this happened during a lockdown. So you had prices not moderating, not deflating during a lockdown or a spread. So now that you start to see some movements and some increases, you're going to see these wholesale prices increase again. And that comes down to when we look at exports, imports. So let's look at exports. Exports were strong, came in at 48.34%. And then when you look at imports were 98.3%. So this is a positive for future exports because we're seeing the imports coming in and then they're going to turn around and export. There was a lot of slowdown. This will help support some of the capacity within the country. But then when you look at diesel consumption, it still remains capped. So while we're starting to see some rebuild of inventories, some normalization of industrial capacity, it's still at a very muted base, which again is just pointing to this nice ramp, but also this cap that we saw before the second wave or the Delta wave, and it's something that we think is going to become a very consistent issue. Also driven by the fact that their export partners, their trade partners, are coming into a bit of a slow period, because everyone keeps talking about pent-up demand, but a lot of this pent-up demand has already been used because you had points in time where you were able to go out and do things, and that's where we continue to see some of these pressure points. And now let's break it down based on Japan, South Korea, Taiwan. So Japan has a bit of a mixed bag. CPI is still fairly muted. When we look at exports were up, beat estimates, were up 48.6%. Imports were up 32.7%, which, as we've been saying, speaks to a more supportive export growth. Exports will moderate a bit, but still have some tailwinds, helping to support while things continue to slow a bit internally. Externally, we're having some of that catch up that we've been talking about. So then when we look to South Korea, PPI continuing to drive higher. Again, that inflationary driver as we see that continuing to get moved out. But again, exports, imports continue to show additional growth. And this is where I want to pause and say a lot of this growth is also at the expense of China. And it's because people have been trying to shift away and diversify their supply chains, which has resulted in more India, Japan, South Korea, Taiwanese imports, exports, and trade partners becoming more interested. So then when we turn to Taiwan, you can see that export orders were expected to be at 30%. They came in at 31.1%. All of these continue to show because there's a lot of pressure that remains in the tech sector. As we said in segment one, this is going to continue. This is going to support additional flows, additional movements out of Japan, South Korea, and Taiwan. So then when we look at global supplier delivery times and input prices, again, this is also going to keep prices elevated as the U.S. is a big importer from these four nations. So that's where we're going to continue to import these prices, and it's going to keep our inflation, our prices elevated. And when you look at where we are, because right now we're already in July is supported. Where are we going to be in August? Then, but the next thing we turn around, we're at the end of Q3, we have that final push into Q4, and guess what? Holiday season. So this is all also ahead of a pull for holiday season, buying. Again, driving up prices, keeping things elevated. So then when you look at global supplier delivery times, output and input prices, they're all going up. Manufacturing PMI output is rolling over a bit, again, more because of issues on supply chains. Global manufacturing PMI delivery times, all-time, going back to 1998 and 1998, all-time highs. Input prices capping out a bit, but still at the highs. And this is where we keep talking about input prices. They're not going to go down. They're just going to go sideways, again, leading to those additional pressures. So then when we look at global inflation, global PMI supplier delivery times, all-time high, global consumer price index is going to be pulled up. And as you continue to see, we're now above where we were. This price index is just going to get pulled up. And that's going to be supportive of these inflationary numbers that we keep talking about, these cost increases. And even if they don't result in cost increases, they're not going to result in cost decreases, which again is going to keep prices elevated to the consumer, which is when we look at small businesses in general, they continue to pass on as much of this price as they can to the consumer. Even though wages remain depressed, this is, again, these issues that are less transitory than anybody keeps talking about, which is why we think these pressures are going to remain. Now that we've gone through this, we're going to shift and focus more on China and what's happening within China itself, and where do we see this ending up for Q3 and Q4 in general.